Good morning, ladies and gentlemen. Hopefully everybody's having a great morning, ready for a better trading day. Good morning, good morning. So 3 stocks here on the watch list today. Might trade something different, depends on how the market opens, depends on how things move, but Roku, MDGS, and ILMN are all fairly interesting today and probably worth mentioning, so we'll do that. Good morning. Yeah, the light seems far better today. Yes, absolutely. And this is the same exact thing that it was yesterday. Camera didn't change. The light's been the same. It's all the same. I'm telling you, it's on. It is on. Yep, thank you. Yeah, AMD ended up selling off yesterday. It was figured it probably would. It made sense. But anyways, let's jump into it. So first stock on the watch list today now is going to be Roku. Everyone's like, oh my gosh, you're always on Roku. But yeah, it's because it's been pretty easy to trade for the most part. So past couple days, right, we've been consolidating. I thought it might go short, kind of fall down back towards the 100 mark. We got as low as, well, I guess we really did. We got to about 160, 170. Didn't quite get to 100. But the wicks, right, you see this long wick here on this candle. Price action still trending up. Long wick there on that candle. Long wick here on this candle. So it's hard to want to be a seller or short bias into this move when there's a bunch of lower wicks getting, well, a bunch of candles getting bought back up, providing these lower wicks on this chart, right? So anyways, you look into today, you've seen it's been bouncing consistently, right? So it shouldn't be too hard, you'd think, for it to maybe give a breakout over some of this top action. So this morning, it looked a little better because we kind of had a little gap here up to this candle and a curl. Now we don't really have the curl as much, but I think it's still worth watching long bias because it's continuously got bought up, trending up to the upside a bit. This morning started with a slight gap, tiny little bit of a curl. If the market stays bullish for the day, holds this gap up pretty well, and then continues running into the day, I think we could see a nice move on Roku, couple points to the upside. So worth watching long, okay? It's been consolidating, might have a break coming here fairly soon. ILMN. Yesterday was boring. Most of these days have been pretty boring for trading. It's just there's just not as much volatility right now. If you look at the volatility index, it should be pretty low. I mean, it's all the way down to 12. There's just really no volatility out there right now. What was I just doing? ILMN. So ILMN stock that was 360 bucks, gap down all the way to 300. So it's about a $50, $60 gap down. If you look at a 4-hour chart, you're going to see that this thing gapped down all the way into the $300 support area, kind of demand zone. So watching ILMN today, if it picks up in volume, might trade it for a bounce to the upside. With this big gap down, it has a lot of room that it could kind of bounce back up intraday wise, and that can create a good opportunity for a bounce play long situation. Oh, did gold really break into new highs? I wasn't watching gold yesterday, or at least GLD. Let's see. Forward last GC. Oh, you're talking about Barrick's gold or whatever that stock is. Yeah, Barrick gold. I see now. I see. Not actual gold. Yeah, we broke into new highs, Brad. But you also, something to take note on too on that break is in the new highs at 16 or close to 16. You got a bearish, it's slight, but you have a bearish divergence in play where the price action went to a new high, but your momentum is starting to trend down. So very likely we'll see this top action roll over into a little bit of a short next couple days to week. How come Warrior? So I'm saying it's slow, but Warrior Trading is making multiple thousands each week. dollar value does not dictate whether things are slow or a good pace market. But I can tell you exactly why he is to make as much money as he makes. So we've had, I think there's like 1 or 2 stocks, maybe 3. I can't remember them all over the past week, that have been penny stocks that have made some decent moves that he's made a lot of money on. But that's only a couple stocks out of the week. But yeah, regardless, if you've never traded summer, then maybe you wouldn't know otherwise. But when you've traded a couple years and you've been through the summer phase a couple times, then you'll start to realize what a slow market's like and whether or not somebody else is making money. And it doesn't dictate whether or not it is or isn't a slow market. There's always money to be made. The opportunity just becomes less in times like these. Yep, Snapchat, Lucas, Snapchat did break into some all-time high areas, correct? Yeah, VISL ran pre-market, didn't even have a chance to get to the open market. Didn't really do much once the market opened. Had 1, 2 small short squeezes. Then you have RVTL, which is a sub-penny stock. Don't trade sub-penny stocks. Again, believe me, the market is slow, if you don't know. Summertime is not the time for penny stocks. Penny stocks right now are super slow. Penny stocks will pick back up in the wintertime. Large cap stocks even right now are slow because it's summertime. There's not as much money moving into the market. All the average true ranges are down. The CBOE volatility index is at 12. Again, volatility is slow. The market's slow. There's no way around it. Believe me, just no way around it. I trade shares. I'll occasionally trade options. Yes, but with that being said, let's get into MDGS. So MDGS, only penny stock worth mentioning this morning. Kind of spiked up a little bit on probably some decent news. Something about a new order going through. So yeah, MDGS gets a commercial order for one of its products, one of its devices, and so starts kind of picking up this morning, falls down, consolidates. This is actually the time to probably dip buy this stock pre-market and see if it kind of pushes back up over VWAP and towards 420. But this is the only penny stock that's worth watching here on the day to trade for the most part, that you can see at least from early morning spikes or gaps. Keep an eye on the high day scanner. Maybe a penny stock will come, and then we'll trade it in the chat room, if it does pop up. But right now, this is the only penny stock that makes sense to watch. We're starting to kind of change trend here. Right, we've kind of trended down. We've broke over trend. We're starting to see a little bit of volume come in on that push. So MDGS, one of the penny stocks to keep an eye on today. There's no quick tips in this game. I mean, I can give you quick tips, but at the end of the day, those tips are only going to go so far. You really need experience. So any quick tips? Yes, buy low, sell high. I know it sounds cliche, but literally buy low, sell high. When something looks bad, buy it when it looks bad. When something looks good, sell it when it looks good. Don't buy something when it looks good. Buy something when it looks bad. Javi, check out, it's going to be either second, third, or fourth link in the description of the video. You can follow that to our website, and that would be how you get into the chat room. Or you can just look in the description of the video. There's a couple different links down there. OSTK, actually, I wanted to short OSTK, but it's kind of holding up decently right now, so I don't think it's time to short it. And the reason I would short it would be off this 200 moving average, and so far it's been holding pretty decently here, but if it does tend to fail this mark here eventually, then I would look to short it. But for now, I'm neutral. Neutral to probably long bias right now. It is starting a little bit of a wedge. You could see a little bit of a wedge breakout even possibly today. You can kind of see that down move, rolls over down, kind of reversing, pushing. Because a lot of people probably sold it here, and a lot of people sold it maybe this day or in this day, trying to anticipate a top. If shorts get caught in this move, they can get squeezed out fairly easily. So I just think that it might be too soon to short because you'd only be shorting off the 200 moving average. You're not actually going based off of supply and demand zone. So if you go off supply and demand, really your short should be starting up around the 23 to 22 mark. So I think it's possible to see OSTK up towards 22, 23 within next week, this week. No, today's Friday. What am I talking about? Maybe next week, possibly. Order rate limit exceeded. Not sure what that means. Never ran into that. I'm not buying Snap over 16. I don't trade Snapchat. But I just looked at it this morning. It was on the scanner. I think it gapped up. I mean, I don't really trade it, guy. It moves too slow for me to trade. TRNX. Interesting. Let's see. 1 second. Sub penny stock. Does not surprising. No, TRNX doesn't really have much opportunity. Spike is stock price is spiking up right now into or close to a previous top. So most likely a little bit more to the upside, and that's going to come crashing down into the gates. Could do something unexpected, but more than not, the likeliest outcome is it's going to spike up close to the 36 mark, maybe a little bit less, maybe a little bit more, and then it's going to come crashing down off the spike top. Nope, nothing favorite, just whatever looks good at the moment. I'll trade continuation plays. Yeah, I mean, multi-day runners. Buy double bottoms, short double tops, play bullish divergences, play reversals. Yeah, pretty much everything. But nothing really. I mean, everything's all. It doesn't really matter. It just depends on the strength of the setup, right? All setups are good to trade as long as it's the right setup at the right time. Amazon's actually been trading really well. You're right. What do you scan in TOS? At this current moment in time, I don't scan for anything in Thinkorswim. Yeah, I don't use Thinkorswim for scanning anymore. AMD cup and handle, possibly. I could take a look at it. I looked at it today, didn't really see one myself, but you might be looking at it in terms of a longer, bigger picture, where I was just looking in the shorter time frame. Yeah, I mean, you can argue that this is a cup and this could be the start of a handle. So yes, after AMD pulls back a little bit, it will bounce. There's going to be at least one day where it tries to bounce back up off this 9 moving average, giving the appearance of a cup and handle. But whether or not it fully breaks out is another story. But yes, AMD will bounce here in the next day, 3 days, 2 days off of like this 9 moving average. So as this comes down and dips, there's going to be a bounce off of AMD, probably around $32. Would make sense to me. You too, Rocket Ronnie. Have a good day, bud. Most of the times I trade intraday time frames. Wait, what was the question? Yeah, again, it doesn't. Everyone. So here's another thing. Everyone always gets concerned about time frames, and everyone goes, "Oh, well, you're looking at this time." It doesn't matter what time frame you look at. It's all the same. Double tops on a 1 minute, 5 minute, 20 minute, 10 year infinity, a double top is a double top, a double bottom is a double bottom, a bullish pennant is a bullish pennant, a bearish pennant is a bearish pennant, a head and shoulders is a head and shoulders, inverse head and shoulders is an inverse head and shoulders, inverse cup and handle, inverse cup and handle, cup and handle, cup and hand. It's all the same. Doesn't matter the time frame. All the same. But generally speaking, you'll see me, most of the stuff I look at is on 1 minute time frames. I tend to trade 1 minute time frames more often than not. So more often than not, everything I do will be on a 1 minute time frame. But of course, I see things on 5 minutes, 20 minutes, 1 minute, like this. This right here is a double top on a yearly chart. It's also a double top on a 4-hour chart. It's also a double top on probably a 20-day chart. Not a 20-day chart because you can't see the couple days there, but it'll be a double top on a 30-day chart. It's a double top on a 30-day chart. Okay? So again, double top 30, double top 40, double top 60, double top 180, double top, 1 year day, double top probably even a, yeah, I mean, that's it. You get the point. Yes, longer the time frame, more that it develops, the more accurate a play can be. But if it's a double top, it's a double top. If it's a double, it's, again, same time. The patterns occur on all time frames are the same thing on all time frames, but each setup you look at, some, yes, can have more strength or less strength over others, depending, again, on the setup, the stock, the news, the volume. It all plays a part. Let's see, 8:53, got a little bit of time. Let's see. Robert, it's not whether or not I think McDonald's can still go up. You'd have to do a lot of research to determine whether McDonald's can still go up. You'd have to look at their last financial. You basically have to look at their earnings for the past couple of reports going into this earnings. Have they been progressing, and look at the numbers they've been doing, and then you have to be able to justify whether or not you think that they can do more than those numbers if you wanted to buy before the earnings. So yes, they could go up. Yes, they could go down. Institutions, people probably have already priced in their earnings for McDonald's, so it's possible that the earnings have already been priced into the move of the stock. So then by the time the earnings are announced, the stock drops because it's already been priced in. McDonald's could be trading well over its actual worth, which basically means if it's trading at 90 or whatever it might be, right? And even though they report great earnings, the company is only worth 80, stock drops 10 points. So it could, but you'd have to read financials and really be prepared for that. I don't think the Feds are going to cut. I don't personally think Feds are going to cut rates. Actually, well, no. Yeah, they probably will try and cut rates. It's hard to say for sure, but I think they will try and cut rates. When you think about it in terms of, well, I'm just one of the guys that always bet on the other side. Basically, yeah, I would not be surprised that the Feds try and cut rates because that's what the Fed does. They try to play God and manipulate the market. They say that they're doing things in accordance with data to help keep things running smoothly, but you're not supposed. It should just be a free market. Let the market determine the market, right? Like if somebody wants to pay me $10 for a Snickers bar, I should let them pay me $10 for a Snickers bar. We don't want somebody else coming in and going, $10 is too much for a Snickers bar, so I'm going to manipulate this portion of the wrapper for the Snickers bar so that we can make it cheaper. And then next thing you know, the guy buys a Snickers bar, he puts it in his pocket, and since we manipulated the wrapper on the outside, now the wrapper becomes undone in this guy's pocket when he's walking home on a 90-degree day, and next thing you know, the Snickers bar melts all in his pocket, and now his pocket's got a bunch of chocolate, and he takes it home to his wife, and his wife doesn't know it. She puts it in the washing machine. Next thing you know, all the clothes have chocolate on them, and now they have to go shopping for a whole new basket of clothes, and they already have no money to afford their mortgage, and you can see how it all snowball effects. Exactly. That's kind of like what happens when you try to play God and manipulate markets with interest rates. I mean, you can do it for so long, but eventually it just kind of bubbles up, and then inevitably it pops, and then boom. But if you let the market figure itself out, it's going to do what it needs to do without having to manipulate it. Well, okay then. Got a little weird there for a second. Really weird. You don't really know where you're going with that one, but now you guys understand. The American dream. Snickers bar melting in your pocket. So again, I think that they will try and cut rates because they'll do whatever they can to try and keep the market from going into recession mode, even though recessions are healthy. What's not healthy is economic crisis and crashes, but economic crisis and crashes usually happen because of government screwing up, because they think they know it all, but in reality, they're just Homo sapiens and a few humans that try and state that they're smarter than the average human, but in reality, most humans are pretty much all equal. We're all created equally, so we all make mistakes, and that's everything that we do. We repeat mistakes over and over and over, so again, it is what it is. They're going to try and cut rates and do whatever they can. Yeah, Trump wants the economy to keep going up. I mean, if I was the president too, I'd want the economy to keep booming and keep soaring and everything to keep going up. And one way to do that is to try and cut interest rates. But in reality, you shouldn't be cutting interest rates because the president wants you to cut interest rates. If the market's going to crash, you got to let it crash, right? So the problem here is that the market was so high, right? Even coming into office for President Trump, and then him coming up and this euphoricness, even put more buying pressure on the market. So there is kind of a problem that he's in, because he's in a pickle, which basically means the market crashes, he's going to get blamed for the market crash, when in reality, it wouldn't even be his fault, because the president does not determine a market crash. A market crash only comes from thousands and thousands and thousands and hundreds and millions of consumers selling off equities to cause a stock market crash. And obviously, Donald Trump cannot be at millions and millions and millions of computers all around the country to hit sell all at once. So we already know that it's not him. And then you can't blame an economic crash on him when the economic boom started back in 2009 from quantitative easing, which was implemented during an Obama time. And then it's hard to blame the crash on Obama when the whole bubble started in Bush's time. So it's really just a snowball effect, and wherever you get put in the place, the consumers and the American citizens are going to blame and fame anybody and who is at the right place or the wrong place at the wrong time or the right time. That's just how the system works. But if you can stop thinking like a child for 1 second, which most people don't, you'd realize that not one president can totally cause an economic crash, and not one president can cause an economic boom. So anybody praising Obama for a great economy, you're wrong. It was quantitative easing that basically steroided the economy into an overall boom. And then President Trump created a new euphoric high that caused more people to buy the market up. And so if the market crashes on him, it's not really his fault. We've already been in a 10-year bull run. The Fed stopped quantitative easing. They're going into quantitative tightening. The global economy is already slowing down. So again, how do you look at it? Thumbs up the video. So, with that being said, guys, it is 9 o'clock. Sorry for the rambling, but it was a good time. I had a great time today. Great time. So, with that being said, guys, everybody take care, and I will see you guys next week. Everybody try and stay green today. Again, might be a slower day in the market. It's been slower days. So, for me, when I know the volatility is down and I get into trades, I don't anticipate or look for as big of moves as I would generally look for when the volatility is high, which basically means when I get a move that moves decently, I know that's probably a majority of the move that's going to happen based on the volatility in the market, and I'm more likely to sell quicker rather than later in this market. Everybody take care, have a good day, and I will see you guys next week.